example 13, it's like just, it's from this overhead account only, the double entry. Okay. See the entries, indirect material, overhead account debit. And already we studied double entry for material, right? So material account, if you are issuing material, material account credit. So that double entry only I explained here. So if you have a confusion on this, just look at the T account of production overhead, what I gave now, and look at material T account, and look at labor T account. Then you will understand. Okay? Now heading, a very big heading right now. Absorption and marginal costing. Absorption and marginal costing. Okay, fine. Heading, absorption and marginal costing. See, traditional absorption costing only we discussed, accounting for overhead. Right? That traditional absorption costing have so many loopholes. Why? Because I'll tell you how we compute OAR. OAR is equals to budgeted overhead divided by budgeted activity level. Let's take budgeted overhead is 70,000. Let's take budgeted activity is 5,000 labor hours. Practically think, is it correct? This 70,000 overhead is created by different departments, right? Some department may be labor intensive. Some department may be machine intensive. Yes or no? Yes or no? But just we are using what? Labor hours to find out the OAR. Is it correct? You understood what I'm saying, right? Therefore, the traditional absorption costing system have its own limitations. Right? Certain cost we can control, certain cost we can't control. Right? For example, those costs we call irrelevant cost. For example, let's take the COVID came again. Right? All classes are online. Right? Happy? Again, let's take the COVID. You want to see my face? Okay, now? Okay. Huh? You can see only nose only. Okay. After class, I'll show my face to you. See, let's take again, we affected with the COVID in India. Right, the entire Bangalore, entire India is affected with COVID. So again, lockdown. Fine. Classes are online. ArivuPro directors need to pay rent. Yes, they should pay rent. This is irrelevant cost. What is the decision they took? They try to conduct classes online, but still they need to pay rental. They need to pay rent cost. So rent cost is irrelevant cost for them. So certain decisions we make in our life, some cost are relevant cost, some cost are irrelevant cost. You got my point? Understood? Right. So in the marginal costing principles are started, we derived with the marginal costing principles because we thought, no, absorption costing, another term is full cost. Full cost is not practical. If we go with full cost, it is not correct. Right. For example, let's take the session is started, management accounting. There is still vacancies, right? Another 10-15 students can join. We started, right? For you all, we charge, let's say 100,000. Let's assume chapter wise we are subject wise we are charging, per subject 15,000 we charge. Okay. Now session is started. Okay. Now 2 students are coming. Now let's almost 5 chapters finished. 2 students came and requesting, I want to do management accounting. Then the management said, no, already 5 chapters finished. No, I'll pay 8,000 rupees. I'll do the balance. Now, if you are using traditional absorption costing, you will tell like this. No. 15,000 rupees you have to pay. Right? If you are thinking marginal costing basis, you will think only relevant cost. What is relevant cost? If that student we take or we didn't take, the same cost need to be paid, right? Need to pay the lecture fee and all the cost is same. So rather than losing that 8,000, we can take that students, okay, accept, come, pay 8,000 and do the balance. See videos. Right? That thinking we call marginal costing. Certain cost we can't avoid. Certain cost is irrelevant. Why we are thinking about irrelevant cost? Why we are thinking about irrelevant cost? Understood? Clear? I'll tell you. I'll tell you. Actually, when it comes to COVID period in Sri Lanka, we suffer economic crisis also. Right? It's a serious problem as a lecturer I face. Right? So initially, we do online sessions. Then they start power cut. So when I have power cut, I can't do the session. When I have power, the students from different regions, everyone have power cuts. If I start at 9 o'clock, some students say no. Some students say no, sir, I don't have power. Right? You got my point? Then I bought a generator. At least I will do. If students are unable to join, they can get the recordings through Zoom. I bought a generator. Right? I spent somewhere around 75,000 rupees to buy a small generator where I can use my small studio. Right? But whatever the setup I have, 75,000 rupees I spent. Then no petrol. Petrol. Huge queue. To buy 4 liters petrol, you need to stay at least 3 days in the queue. Still, I can remember I stayed 2 days in the queue within my car to fill up my tank. 3 days. My brother is bringing food for me every 3 times. When I want to go to washroom, my brother, I'll call my brother, he will come, he will sit inside the car and I will go to home. We suffered. We have everything, cash, everything, but we don't have things. Then we decided, no. I spent 3,000 rupees. When petrol is 250 rupees, I spent 3,000 rupees to buy petrol, to do sessions, classes. So 10 liter can, I gave 30,000, keep it. Right? I can't go and stand in the line like that. So I spent, you got my point, struggles that we are getting, right? All these costs are relevant cost or irrelevant cost. If I want to do the session, I need to spend these things in a recession. Understood? Then we can't buy from the outsiders also by 3,000. Why? Those fellows put water inside the petrol and they're mixing. Now the problem is the quality of the petrol. They're mixing so many things. Thinner they mix. Some people will mix water. You got my point? So in our life, when we are taking certain decisions, business organizational decisions, certain cost is relevant, certain cost is irrelevant. You got my point? See, Christopher Sir is decided to take a foreign faculty, right? Hotel cost and the cost, aircraft, ticket, relevant or irrelevant? That is relevant. Have to pay, right? How much? INR maybe 30,000. Flight ticket, 30,000 for Bangalore. From Sri Lanka to Bangalore is almost 27 to 30,000. Right. So for Chennai it is almost 15,000, 11,000 to 15,000. Chennai airport. Bangalore means it's almost 30,000, 27,000. Okay. So let's take if I am visiting 2 times. For your session I am coming 2 times. How much they need to spend? Almost 55,000 they need to spend. Only for the ticket. So what I am trying to tell you is the decision is what? Taking a foreign faculty. Cost is relevant. If the management is decided to take an Indian faculty, this cost irrelevant. So there are certain costs which affected by the decisions. Based on your decision, the cost get affected. Yes or no? Yes or no? Why I ask you, okay, I'll take you 6 hours. Because if I do 4.5 hours and if I extend the days, it is additional cost to the organization. I should not think like that. Right? 4.5 hours means 4.5 hours. Right? 10 days session means 10 days. I can work more than 4 hours, but I should not extend 10 days. Why? Because another additional cost to the organization. You got my point what I'm saying? So all the decisions that we are taking in the life, or all the decisions that we are taking in the organization, certain costs get affected, certain costs will not affect it. Absorption costing system is believing whether it is affected or not affected, full cost to be taken. Understood? Marginal costing is believing no, only affected cost to be taken. The cost which not affected, don't take it. You got my point? Understood? Understood? Let's take an example. Sugi, he is running a shop, ice cream shop, chocolates and ice creams. Okay, shop nearby this roadside. There is a small shops, right? Likewise, in front of that Christ. Huh? Yeah, in front of Christ. There are so many shops. Right? Likewise, he is doing a shop. He is having some ice creams which going to expire by next 2 months. There are Cadbury, there are chocolates, right? Cadbury chocolate and Mars chocolates, right? Going to expire after 3 months. What is his decision? Marginal cost decision, no total cost decision. Marginal cost decision. Why? The selling price is 50 rupee. He will put an offer. 15% off, 20% off. He is not trying to cover entire thing. He is trying to cover the loss. Because what is relevant at that time? Time. After 2 months, he can't sell, right? The entire thing is lost. So marginal costing is what is relevant at that time. Think. Absorption costing is no, full cost. So traditional organization always full cost. Modern organizations try to cover the marginal cost. Yes or no? That's why Black Friday offer, November, Christmas offer, marginal costing principles. They used whatever remain unsold by before the stock count, they need to sell it off. That's why they are giving offers. They are not considering or they are not taking decisions by looking at the total cost. You got my point? Understood? And for this is the actual explanation for marginal and absorption principles. But you all are too small. Man, you all are babies. Yes or no? Kids. 17, 16 means kids. So for you all, the syllabus is revised like this. Marginal costing principle, taking decision based on variable cost only. Absorption costing is taking decision based on variable cost and fixed cost. You got my point? That is the explanation at your level. But when you are moving to performance management, the clear picture you will get what is exactly marginal decision, what is exactly absorption decision. Government organizations are taking decision by looking at what? Total absorption cost. Geo, can you remember Geo? When they introduced their products into the market, can you remember? 2018? No. When I visited, I think it's 2017 or 16. Probably I think 16. Because at that time when I'm visiting to Kerala, the offer goes, everything is free, even phone is also free. Is a total cost decision or marginal decision? Now go and ask. Free phone? Huh? Aircel, can you remember? Tamil Nadu people, can you remember Aircel? Huh? After Jio? Yeah, okay, you know Active Surya. Okay, fine, leave it. Aircel is also a service provider. No more, right? No more. But when Jio launched, their decision is marginal decision. Everything is free. Huh? Coca-Cola also said. But Coca-Cola did. Buy one, take one. Buy one, take two. Just free. When they launched their product into new market, what they do is they will keep that like booth. You know booth? Like ATM booth, right? In the airport and all, you know that booth they have, right? You need to pay money and you need to take. When they launch, everything is free. Anyone can take the booth free of charge. Marginal cost decision. Later, you got my point what I'm saying. So marginal costing decisions will be support the organization in certain levels. Right? They are not considering about the cost. They are considering opportunity cost. Right? Now think where Coca-Cola is. Now think where Jio is. Right? Once Jio become a monopoly, then they will show who they are. Okay. So when the company is reached to monopoly, then they will show who they are. Then you can't show your consumer power. You got my point what I'm saying? Understood? Right. Write down first point. So this particular topic is very, very important, students, in your workplace. It is very, very important for your PM also. The same topic is there in your performance management, right? It is a repeating topic. We are not going to study accounting for overhead in performance management, but we will study absorption and marginal costing in F5 also. Therefore, mark it as very important. Sometime I might teach to detail, because not to pass F2 only, to support F5 also. Clear? So write down first point. Marginal cost principles. Marginal cost principles. Consider variable cost, variable cost in decision making. Second point. Fixed cost is irrelevant under marginal costing system. Fixed cost is irrelevant. Fixed cost is irrelevant under marginal costing system. So we are not considering fixed cost. Third point. Why? Signal. Third point. Third point. Fixed cost is treated as period cost. Fixed cost is treated as period cost. Fixed cost is treated as period cost. Within bracket, irrelevant. Next point, very important point. Under marginal costing, contribution is an important factor. Contribution is an important factor to take decisions. But under absorption system, profit is the important factor. Profit is an important factor to make decisions. Next point. Absorption system use total cost into decision. Used total cost into decision. Therefore, fixed cost is also relevant. Therefore, fixed cost is also relevant. Understood? Understood? Make it very simple. Marginal costing, taking decision based on variable cost. Absorption costing, taking decision based on total cost. Marginal costing, fixed cost is irrelevant. Absorption costing, fixed cost is relevant. Is it clear? Right. Now here, write it down. We discussed contribution is the main factor under marginal costing. How to calculate contribution? Did you study in your school's contribution? Did you all study? College. Did you all study? So contribution equals, write down, sales price. Sugi, how to calculate contribution? Mr. Madi? Yes, Kishore?
Sales minus variable cost.
Very good. Sales minus variable cost. Sales minus variable cost. This is how we calculate contribution. And here, profit is calculated like this. Contribution minus fixed cost. So if you minus your fixed cost from the contribution, you will get the profit. Understood? Is it clear? Because if you are minusing fixed cost here, it is equals to minusing from the sales price, but total cost. Then you will get the profit. Understood? Right. Now, let's move to this example. B Limited. B Limited makes only one product. The cost card is given. Making one product and the cost card is given. Direct material 3 rupee. $3. Direct labor $6. Variable production overhead $2. Fixed production overhead $4. Variable selling cost $5. Selling price 21. Budgeted fixed overhead based on budgeted production 5,000 units. Opening inventory 1,000 units. Closing inventory 3,000 units. Sales during the period 3,000 units. Fixed production overhead $20,000. Question number 1. Calculate contribution, total contribution. So write it down. Total contribution. So let's see how to calculate total contribution. Sales minus variable cost. Sales minus variable cost. We know the sales value is how much? 21. So sales 21 minus variable cost how much? Concentrate. Direct material variable cost. Direct labor variable cost. Variable production overhead. So 3, 5, 11. Variable selling cost 5. 11 plus 5. 11 plus 6. 5, 16. Sugi, how much 11 plus 5? 1, 6. Very good. So how much? How much? Contribution how much? $5. Copy this. This is contribution per unit. 1 unit. This is contribution per 1 unit. How many units they produced? How many units they sold? How many units they sold?
3.
Yes. Normally the contribution sales 3,000, right? So actually the contribution is related to sales. So every 1 unit you sold, you will get a contribution. So how many units you sold? 3,000 units. So total contribution how much? Total contribution how much? $15,000. Copy this.
What is the formula for variable cost? What is the formula for variable cost?
All the variable cost will be variable cost. $15,000. Understood? So this is how we calculate the total contribution. Now calculate the profit or loss. How to calculate profit or loss? Yes, total contribution minus fixed cost. Total contribution minus fixed cost. How much total contribution? 15,000 minus fixed cost how much? Fixed cost how much? 25,000. 25,000 equals 13,000. Profit or loss? Loss. 13,000 loss. Sorry, 10,000. Yes. 10,000 loss. Copy this. Clear? Yes. No, you are seeing the book. The selling price is different. Copy this. How to get 16? 16 variable cost. That's how this Sugi is asked. What is the equation for variable cost? Variable cost means variable cost. The cost which vary with the activity is variable cost. So direct material is a variable cost. Sugi, you need this equation, right?
Actually, ask that is not variable cost, value cost.
Direct labor is also a variable cost. Direct expense is a variable cost. But all three together we call prime cost plus production or variable overhead cost. When it comes to indirect cost, variable production cost plus variable selling cost, some plus variable administration cost. All these are indirect cost but variable. Altogether we call variable cost. Here this 3 rupee, 6 rupee, 9 rupee, 2 rupee, 11 rupee, 5 rupee, 16 rupee. Mr. Bibek Kumar, understood? Okay, now copy this 10,000 is loss. Mr. Raghu, understood?
Yes, sir.
Sugi, understood? What you understood? All understood. Huh? Then you can leave because you understood everything. You are clear? Right. Now write down an example in your exercise book. In your exercise book, write down an example. Let's do one more question. Number of units sold, 1000 units. Direct material cost, 8 rupee. Direct labor cost, 12 rupee. Direct expense, 5 rupee. Variable production overhead, 15 rupee. Variable selling cost, variable selling cost, 5 rupee. Fixed production overhead, 10 rupee. All are per unit term. Profit 10% added to total variable cost and reach selling price. and reach selling price. Question number 1. Unit contribution. Question number 2. Total contribution. Part 1, unit contribution. Part 2, total contribution. This is question. You need answer? Okay. I'll give the answer. Wait. Okay. Do it. Do it. Maybe, is it a loss?
It's a loss.
Is it a loss?
I think so.
How it's become loss? Because for your total variable cost, whatever you get, okay, for that you are adding 10%.
Yeah.
Then you are reaching selling
No,
price.
I'm not getting sales.
Okay, contribution is loss. That's fine.
Sales is wrong.
Sales is okay, fine. Contribution is loss. See here.
I think
Okay, let's check whether right or wrong. See here. Sugi, what is the answer? Really? Then see when I'm doing. Others, just see the way that I'm doing. Contribution, how to calculate contribution, student? Sales minus variable cost. Here in this question, they gave direct material, how much? 8. That is variable cost. Direct labor, how much? 12. That is variable cost. Direct expense, 5. That is variable cost. Variable production overhead, 15. That is also variable cost. And variable selling cost, that is also variable cost. So total unit variable cost, how much? 8, 12, 5, 15, 5. How much? 45. Right? Per unit is how much? 45. Now, variable cost is 45. Sales how much? Selling price. Not given, right? But they said the selling price is equals 10% of 45. So 4.5 plus 45. You got my point? You got my point? So variable cost, we are adding a profit of 4.5. So selling price how much? 49.5. This is your sales price. So 49.5 minus 45. What is your contribution? 4.5 per unit. This is unit contribution. Number 2, total contribution. Total contribution 4.5 per unit. How many units we sold? 1000 units we sold. 4500. This is your total contribution. Right? Profit or loss? I didn't ask that question, but anyway, let's do that also. How to calculate profit or loss? Total contribution minus fixed cost. Total contribution how much? 4500. Fixed cost how much? Fixed cost per unit how much? Fixed cost 10. Sorry, per unit 10. Actually, I didn't give the production units. For fixed cost, you need to take the production unit. Okay. Assume the sales and production are same. Otherwise, it is wrong. Huh? You can't take sales units for calculate the fixed cost. Right? That's why I didn't ask it as a question for our understanding. Let's assume 1 unit how much fixed cost? 10. So 10 multiplied by 1000 units. These 1000 units, sales also 1000, production also 1000. Clear? With that assumption, yes, 4500 minus 10,000. How much loss?
5,500.
5,500.
Got concluded in this sense.
Huh?
Got concluded in this sense.
This answer. Okay. Right. Now, in your exercise book. Now, right. Let's move to absorption marginal costing comparison in the tube. See here. Under marginal costing, inventory is valued at variable cost. Correct? Whereas under absorption costing, inventory is valued full production cost. What is full production cost? Variable cost plus fixed cost. Therefore, the inventory value will be different under marginal costing and absorption costing. Don't worry. Once you prepare profit statement, you will understand. In your examinations, you may require to find out profit or loss under each costing method. For this purpose, we prepare profit statements. Clear? Right. Don't worry about this inventory related thing. When I am doing the profit statement, you will understand. Concentrate. It is very, very, very important. Anyone who didn't understand profit statement, let me know. Right? So that is what going to be repeated in your FM. PM. Okay, it's going to be repeated in your performance management. Clear? So write down in your exercise book marginal costing profit statement. If you have printed tute, write down in the tute itself.
Where is this topic on college?
You studied this under FM. Ah, okay. What?
Study take risk.
Really thought.
You share what is relevant.
The best way of studying is teaching. You got my point?
That's a good taste.
The best, yeah, serious. If you really want to remember things, man, the best way is, I'm not saying group study, man, I know about your group studies. The best way is teaching to someone else. That is the best way to remember. If someone asks doubt, right, take them and keep it and teach everything to them. Then you will understand.
So what if that day you only confused with the doubt? Who was asking doubt that day only confused with
No. When you should have some skills, huh? When that fellow is asking a doubt, actually you don't know. Don't ask unnecessary questions. Those are not examinable. Right? Okay. That is also true. Like Sugi and all. If someone is going to explain, that fellow will ask why the board is white color. Right? Then how to explain? Huh? Like what is the equation for variable cost? Then I need to find out the equation now. Right. So that risk is also there. So marginal costing profit statement. Draw this like your income statement. First, sales. Minus cost of sales. Under cost of sales, this is marginal costing profit statement. Fixed cost will not be considered. Okay, so this is marginal costing profit statement. Marginal costing profit statement, fixed cost will not be considered. So under your cost of sales, the inventory is valued under variable cost only. So write it down. Opening inventory. You all know trading account, right? You all know, right? Trading account and income statement. Okay. So under cost of sales, opening inventory. Clear? Concentrate. අනේ දෙයියනේ මං කියන දේ අහන්නකෝ. No. I ask you to concentrate. Okay. Opening inventory need to be valued on variable cost basis. You got my point? Understood? Then variable cost of production. Variable cost of production. You might study purchases. When the company is buying things from the outside and resell, it is purchase. When you make inside your company, it is variable cost of what? Production. Variable cost of production. This is also we take only variable cost. If you add together from this, we should minus what? From this we should minus what? Sugi. When I'm asking a question, if you don't know, you have to say no. Right. அது வந்து don't say like. Very good. See, closing inventory. Don't give rhythms. Closing inventory is also valued at variable cost. Clear? Don't get confused. Opening inventory 500 units they gave. What is the value? You are taking only variable cost. Multiply, you will get the value. Right? So variable cost. So minus closing inventory, you will get the value here. In your school trading account, you call this as gross profit. Right? Now we are not calling anything like this. From this, concentrate. This is variable production cost only I took. Within the cost of sales, I took only variable production cost. There are variable selling cost also. There are variable administration cost also. Understood? Those variable costs need to be minus. So here, from this we minus variable cost. What are the variable cost? Variable administration cost. Variable selling cost. Variable administration cost, variable selling cost. If you take both and if you minus now concentrate. Now concentrate. See here, this is your variable production cost. This is your variable non-production cost, total variable cost. This is your sales. From sales, total variable cost minus what you will get? Sugi, total sales minus total variable cost. What it is? Total sales minus total variable cost. What is that cost?
Total contribution.
He said total fixed cost. Go straight. Okay. There is a staircase. In front of staircase, there is a sofa. Behind the sofa, there is a window. Right. Open that window. Jump. Clear? Huh? Only one floor. It's okay. Then I'll put something else behind you. Nine. So what is the term we used? Total contribution. Total contribution. This is what we call total contribution. Sugi, I am writing like this. Don't write in your institute under absorption costing also. Right? From this contribution, if I minus fixed cost, there are different fixed cost, students. One is production fixed cost, because we didn't take this, and selling fixed cost, and administration based fixed cost. There are different fixed cost. And if I minus all these fixed cost, what I will get? Sugi, from total contribution minus all the fixed cost, what I'll get? Profit. You genius. See? But I'll get profit. This is how we prepare profit statement. We prepare profit statement. Khan, is it clear? Now you understood profit statement? Right. So this is what called marginal costing profit statement. Right? This format will not be given in your equation. You should know this format. Okay. I'll give 2 minutes. From the beginning, read it properly. From the beginning, read it properly. Very, very, very important. And leave some space below this profit statement. I'm going to dictate some points. Read it properly. It is very, very important. Now concentrate, students. See, actually we are valuing our inventory, which means cost of sales based on what? Variable cost. Yes or no? So under marginal costing method, inventory is valued at variable cost. Agree? So under this, write down first point. Under marginal cost, inventory is valued under marginal cost. Inventory is valued at variable cost. Inventory is valued at variable cost. Under this method, second point, under this method, fixed cost is treated as, under this method, fixed cost is treated as period cost. Fixed cost is treated as period cost. Fixed cost is treated as period cost and used to compute profit. So we are not considering fixed cost to compute inventory. We are not considering fixed cost to compute what? Inventory. Understood? Right. I'm sorry. Okay. Now, let's do one question to understand how these profit statements work. So write down example number 2. Example number 2. Marginal costing profit statement. Marginal costing profit statement. Marginal costing profit statement. Fine. Okay. Marginal costing profit statement. Now let's move to the question. Let's take the relevant information first. What is our sales? First we'll do the write up. Then it is easy to fill. First one, sales. First one, sales. Minus what? Cost of sales. Minus cost of sales. Cost of sales, opening inventory. Opening inventory. Opening inventory we are calculating at variable cost. Right. This is not just total variable cost, a variable production cost. Understood? I make it more specific, otherwise you get confused later. Right. Make it variable production cost. Whatever the cost variable which is related to production only. Okay. And variable cost of production minus closing stock inventory. Closing stock inventory. Minus other variable cost. Then you will end up with what? Contribution. You will end up with contribution. Minus what? Fixed cost. Then you will end up with what? Profit. This is the format. This is the format. Just copy this format first. Now, let's move to the question. A company commenced business on 1st of March, making one product only. The cost card in which as follows. Direct labor, variable cost or fixed cost? Variable cost. Very good. Huh? Direct material, variable cost or fixed cost? Variable cost. Variable production overhead, variable cost or fixed cost? Variable cost. Fixed production overhead. Huh? Fixed interest. Fixed cost. So now total variable cost here how much? Related to production? 15. Can you remember these? Understood? Yes or no? Mr. Raghu, understood? Very good. The fixed production overhead calculated the basis. Budgeted output given how much? How much? The fixed production overhead how much? 15,000. Fixed production overhead how much? 15,000. Understood? Now clear? Right. Selling and distribution expenses fixed how much? 10,000 per month. Variable 15% of the sales. Selling price how much? 50. Sales units how much? 1,500. This information we are going to apply here. So how much? 50 multiplied by how many units, students? 1,500 units. 75,000. Copy this first. Swiggy, copy this. $1 is equal to how many INR? 79. $1 is equals to INR how much? 80. Buying price or selling price? Selling price. You don't know what is buying price and selling price, right? Leave it. Let's make it 80.
So 81.
81. Okay. Swiggy, understood? Copied? Right. Should not get any other calls. Right, okay? Fine. Now, let's move. Cost of sales. Opening inventory. Did they give any opening inventory, students? Opening inventory? Sugi. Opening inventory they gave or not? Raghu, they gave or not? Mr. Madi, they gave or not? Gave. Yeah, show me.
Direct labor.
No, my question is opening inventory did they give? Where? Where, man? Show me. Where opening inventory? Did they give opening stock? Yes. How? No opening inventory. Opening inventory is 0. It's not given. There is no opening stock in the question. If they have opening stock, they will tell. Opening inventory is 0. Mr. Swiggy, opening inventory is 0. I can't see those opening inventory in the question, but you can see how it's possible. Remove the glass, man. Change that spectacles. Something problem in it. Then who said? Then why you are confidently said the opening inventory is there? Okay. Now it's lost, right? Okay, very good. So opening inventory is nil. Opening inventory is nil. Now students, for variable cost of production, variable cost of production we need to calculate. What is the value? See, variable cost means you should take, here concentrate, variable cost means you should take direct material cost, direct labor cost, direct expense cost and variable production overhead. Because I told you, you should take variable production cost. Now, how many production units? Sugi, how many production units? 2,000. Very good. Now your spectacles working properly. 2,000 units. Multiply by, what is your variable production cost? Direct material how much? Direct material kiyada mang ahanige uttare dennako. Direct material how much? 8. Yes. Direct labor how much? 5. Very good. Direct expense how much? Don't have direct expense. Variable production overhead how much? Mr. Sugi, how much? 5. Now they changed. Variable production overhead. Show him. He is searching somewhere else. 2. What is the page number that you are seeing? Is it correct? 2. Okay. 852. Total how much?
15.
Very good. 15. So variable production cost. Students concentrate, right? Variable production cost is 15. So 15 multiplied by 2000, how much?
3 lakh.
See, while I am teaching to you all, wait. While I am wait. While I am teaching to you all, if I got this 20,000. No, wait. While I am teaching, if I get a heart attack, if I get something else, right? If I die, right? You should take the responsibility to my family. Okay, because no, I don't have health insurance. Okay, company also not providing health insurance. When I'm asking a question, if you are responding like this, 20,000 multiplied by 15, suddenly I will get heart attack. Okay, no, don't do that. How much? 30,000. 30,000. 3 lakhs.
Sir, you have to take 20,000. So you said 3 lakh.
Huh?
You said 2,000 units to him. So he said 3 lakhs.
That is also wrong, no? 2,000 multiplied by 15 is also wrong, no?
There is 20,000 units for him.
Okay. 20,000. What do you say? 2,000 units multiplied by 15, how much? 30,000. This is not units, huh? This fellow, I don't know what time. I'll tell you, Christopher, sir, next time. I need a separate health insurance. Because in India, the health is very expensive. So because of students, if I get anything, right? 2,000. Again, I'm now worrying because now only he is doing F2. Again, he will come to F8 also. Again, if he will pass, he will come to AAA also. I think about my situation there. Okay. So how much started? 30,000. Now closing stock, how much? Move to the question again. Students concentrate. Production is how much? 2,000 units. Sales how much? 1,500. Then balance how much? 500 units, what we call? Closing stock. 500 units, what we call? Opening stock is nil, closing stock is 500 units. Very good. So closing stock 500 units, students, multiplied by variable production cost, how much? That is variable production overhead. Variable production cost, how much? 15. Not 15%. Concentrate, yeah. Sugi, concentrate. See here. 8 plus 5 plus 2, total 15. Understood? Right. Variable production overhead and variable production cost is different. Whatever the cost we used to production, which is variable, that is what called variable production. Understood? மனசிலாய் விளங்கிச்சுதா? நான் சொன்னது விளங்கிச்சுதா? நல்லா விளங்கிச்சுதா? பிரச்சனை எதுவும் இருக்குதா? எதுவுமே இல்லை தானே? நல்லா விளங்கிச்சு தானே? அண்டர்ஸ்டுட் தானே? பிரச்சனை இல்லை தானே? மதி lamai. So students, so 500 units multiplied by how much? 15. Why I am taking 15? Because under marginal costing we are considering what? Variable production cost. Clear? So total multiplied by 500 multiplied by 15. Mr. Sugi, how much? Very good. 7,500. Plus or minus? Closing stock plus.
Minus.
Okay. See? Minus. Closing stock, what you should do, Pute? Minus. So 30,000 minus 7,500, how much? 22,000? 22,000? 22,500. 22,000? 22,500. So what is 75,000 minus? Take your calculator. Calculators are allowed. minus 22,500. How much? 52,500. We only minus variable production cost. Yes or no? There are other variable cost also. What are the other variable cost? Sales cost, administration cost, variable. That need to be minus. Go to the question. Find out, is there any variable non-production cost? Is there any? See, selling and distribution administration expenses, 15% variable sales value. How much sales value, Lamai? Students, our sales value how much? 75,000 into 15%, how much? 11,250. You got my point? The question they said, from the sales value, 15% variable cost. But that variable cost is not for production. That variable cost related to what? Sales, administration and distribution. What I am explaining, understood? When I am seeing your face? Understood? Don't look at like that, man. Understood? Yes. You only understood, Mr. Sugi. Mr. Madhi understood. Mr. Raghu understood. Reddy understood. You too, Pute. Clear? Understood? You three? Understood? Online students understood? 75,000 into Sanchu, variable production cost. Variable production cost. Generally we call variable cost, it is variable production cost. That's why we use variable cost separately here. Sanchu understood? Generally we call variable cost, but it means variable production cost only. Understood? Even in your Kaplan study text, if you refer marginal costing inventory is valued at variable cost, but it means variable production cost. Is it clear? Right. Now 11,250 is your other variable cost. Now concentrate. This is your variable cost. This is also your variable cost. Total variable cost. Mr. Sugi, from the sales, total variable cost minus what we call? Total contribution. How much the value?
41,200.
41,250 is your total contribution. In India, total contribution. Yes. Contribution. Yeah, in Sri Lanka it is contribution. In India it is contribution. Yes. What is it? Huh?
India is Suru. Sri Lanka is
I heard that term, Sugi. It's a famous term, right? Okay. Food delivery app is, okay. Like Zomato. Sugi. Okay. Sugi. Sweet. Sugu. Okay. But you are not sweet. 41,250 is your total contribution. Students understood? Yes or no? Sugi understood? From this we need to minus fixed cost. How much fixed cost, Lamai? Students, how much fixed cost? Read that question and find out how much fixed cost. 15,000 here, 10,000 here. Production fixed cost is 15,000. Non-production fixed cost is 10,000. I'll make it more informative. Production, how much? 15,000. Write like this a detail. Once you practice, you can directly take the values. Later you won't understand from where I took 25. Production 15,000. Non-production 10,000. Non-production 10,000. Total how much? 25,000. Minus. Now how much my fixed profit? How much my profit? Students, how much my profit? 16,250. Understood profit statement? Profit statement understood. Swiggy understood profit statement. Online students, everyone understood? Yes or no? Profit statement as per marginal costing system. Profit statement as per marginal costing system. Clear? So copy it if you want. Students who need to copy, quickly copy this one. Now students, let's move to the question. See, in this question, they ask us to prepare profit statement under absorption and marginal. Still, I didn't teach absorption. I'll teach absorption tomorrow. Then we'll do absorption profit statement. Otherwise, you'll get confused. Now, part A. Do part A only. I'll give 5 minutes time. Just try this. I'll give 5 minutes time. Prepare profit statement. Prepare profit statement. Very good. See, I got the answer. Khan. Yes, what is your answer? 35,200. Mr. Sugi. 35.2. 35.2. We'll see. Yeah? In thousands. Who told? The security uncle told. Madhi, what is the answer? Oh, good. Bagu? Doing. Okay. Concentrate the way that I am doing. Students, just practice this question 2 or 3 times, right? Today or tomorrow morning. Because tomorrow I am teaching absorption profit statement. Then might be confusing a bit, right? So there are adjustments also. You should be familiarized with this calculation part. Okay, right. Now let's move. Profit statement. Profit statement. Profit statement. Marginal costing. Profit statement, marginal costing. Right. What is the format, students? Sales minus calculator. Cost of sales, opening inventory, variable cost of production. Sorry. Then closing inventory minus variable cost. This variable cost is what? Selling, distribution, administration only. Non-production we call. Okay. Here cost of sales we are taking production overhead, production variable cost, and here we are taking non-production. Then we'll reach to what?
Total contribution.
Contribution, yes. Minus
Fixed cost.
fixed cost. Here fixed cost include production,
Sell.
selling, administration. Very good. Then we will get sorry. Sales how much? 2,300 unit. What is the selling price?
90. 2,07,000.
90. So how much? What is the units? 20,000. 2,300 into 90. 2 lakhs?
7,000.
2 lakhs 7,000. Is it correct? Now opening inventory. Do they have any opening inventory? No. Production? How many units? 2,500. So 2,500 units multiplied by variable production cost. Variable production cost how much? See, this is variable production cost. This is variable production cost. Total how much? 30?
33. 46.
46? No, 45. This is also variable production cost. Variable selling overhead is not production. That is non-production. You got my point what I'm saying? Understood? Lamai, students, concentrate. See here. What I told. See this word. Variable production cost. Selling is comes here. You got my point? That is non-variable, non-production. Therefore, concentrate. direct material 15, variable production 18, direct labor 18, variable production 12. Total how much? 45. So I take 45. What is the answer? 2500 into 45. 1,12,500. Closing inventory. Production how much? 2,500. Sales how much? 2,300. So 200 units. Closing inventory. So 200 units multiplied by, this is 200 units. You don't take as a 0. Okay, it is 200 only. Understood? Otherwise, it's you will tell that is my mistake. 200 units multiplied by 45. How much? 9,000 closing stock. 112,500 minus 9,000. Answer 103,500. What is the value? Again, 103,500. Is it clear? Understood?
Sugu has a doubt.
Where's Sugu?
Why we are multiplying 40?
This 45, these three cost, concentrate. These three costs are variable production cost. It is variable and production related. Right? This 1 rupee is variable but non-production. You got my point? That's why in my previous question also I told you, concentrate here. See this one, variable production cost only I am taking. Understood? Now you understood why I am telling, why I took 45? Total it up and see, is it 45 right or wrong? Right. Clear? Now here variable cost, they gave 1 per unit. How many units we produce? 2,500. How many units we sold? 2,300. There is a variable selling cost. For 1 unit, 1 rupee. Then that 1 rupee need to be multiplied by how many units? 2,300, because it is sales cost, not production. So sales how many units? 2,300. So every unit we sold, there is a 1 rupee of what? Variable selling cost. So total how much? 2,300. This is what? Variable selling cost. Now find out the contribution. 101,200. 101,200. Very good. Online, all the students, they gave answers. Almost all the students. Very good. Now I'm thinking I'll take all the online students and their address, send something to their home rather than giving a treat in this class. Right. 101,200. Now fixed cost how much? If I take fixed cost, see, fixed production cost. Fixed production cost is 30 per unit. Fixed production cost is 30 per unit, and they gave, right? Fixed production cost is 52,500. Concentrate, I am telling one thing. This fixed cost is absorbed fixed cost. Concentrate, it is very technical. This fixed cost is what? Absorbed fixed cost. This fixed cost is actual fixed cost. Absorbed means judgmental, estimated, OAR, budgeted overhead divided by budgeted activity level. So absorbed means estimated. Actual is the actual fixed cost. Under marginal costing, always we used actual fixed cost. Why? No need to use absorbed fixed cost because it is irrelevant for us. We calculate contribution, then once we get the actual fixed cost, we calculate profit. You got my point? Therefore, don't take absorbed fixed cost when you are preparing profit statement under marginal costing. You got my point? Understood? Here actual fixed cost is how much? 52,500. Here how much? 13,000 administration. 500. Clear? Understood, right, what I told? Right. Now take production how much? 52,500. Administration how much? 13,500. Total how much? 6,000 minus. So what is the answer? 35,200. Very good. Answers are correct. 35,200. That is the correct answer. Clear? Understood? Now understood? Please do this question 2 or 3 times at your home. Okay? Under that, write down a point. Okay, I'll give 2 minutes. Copy this if you want. Then I'll tell the dictator. You all thought that I'm going to finish the class. So 8:15 we can go. Huh? Won't happen. Okay. Under that answer, write down a point. Under marginal costing, no, they will give. Vivek, they will give. Vivek, it's like this. Always they will give you actual fixed cost. Suppose if the actual fixed cost is not given, you can take absorbed fixed cost. But what is the assumption? Absorbed fixed cost and actual fixed cost both are same. Right? But at your levels, normally they will give actual fixed cost. If it is not there, you can take absorbed as fixed cost, actual, because both are same, you can assume. Is it clear, Vivek? Is it clear, Vivek? Okay. Under marginal costing method, am I teasing you? No, right? Under marginal costing method, profit is calculated by deducting actual fixed cost from the contribution. By deducting actual fixed cost from the contribution. Suppose actual fixed cost is not given. Continue. Suppose actual fixed cost is not given. Suppose actual fixed cost is not given. Suppose actual fixed cost is not given. We need to assume absorbed fixed cost is equals to actual fixed cost. Within bracket, write down over under absorption is nil. Over under absorption is nil. You got my point what I'm saying? No over absorption, no under absorption. Absorbed overhead and actual overhead both are same. Right? That is the assumption. But generally in your examiner will give you actual fixed cost. If this is not given, you should assume and you should take the absorbed. What is the assumption? No over absorption, no under absorption. Right? Marginal costing profit statement. Understood? Mr. Raghu understood? Mr. Madhi understood? Mr. Sugi understood? Krishok Kumar and the Kavi? Ready? You three? Online students, what we discussed under marginal costing profit statement. Understood? Yes or no? Right, let's stop with that point. And tomorrow we are discussing what? Absorption profit statement. Okay? Good night.